Hello everybody, welcome to the technical analysis webinar here with AvaTrade. My name is Troy, I'll be presenting. As we get started, always keep in mind that there's risk involved with each trade that you take. So you want to manage risk in a way that makes sense for you with each trade. We'll go over some ideas in that regard if we simulate a trade or two. There are some tools built into our web trader and app that actually make the risk management side of things pretty simple. And also keep in mind that what we cover is not meant to be financial advisement, but is coming from an educational perspective. Now, from our main website, we can log into our web trader platform, which offers the same functionalities and features as our app. And what you'll find is you can trade on both the MT4 and MT5 accounts from one location, but with the advanced features and functionalities that you only find in our web trader and app. So if we log in here in the upper right-hand corner, we'll be in the web trader platform. And before we jump into the technical analysis, which is the main focus of the session, we should talk a little bit about the fundamental news. There were some specific economic announcements that I think could play a role with what direction you prefer to find entry points when you're doing your technical analysis, especially involving the euro and the pound. There were some stronger than expected numbers out of Great Britain with CPI data, and whether it was year over year, quarter over quarter, month to month, all of the numbers came in stronger than expected. And when that happens, that tends to be bullish on the currency. It's not a one-to-one relationship, but that typically is the tendency. And the announcements coming out of the European Union were not so strong, kind of at expectation, maybe showing a little bit of a slowdown in some areas. And so it's kind of pairing strong announcements against weaker announcements with the expectation that maybe the pound has a fundamental reason to be stronger than the euro right now. And so if you looked at the economic calendar, which you can find here, you can click on the economic calendar and pull that up. And we go over the calendar in more specifics in my fundamental analysis webinar. But in general, I've kind of described the most significant announcements that came in so far today. So if we take a look then at a Euro GBP pairing, which we have a live signal on that right now coming from Trading Central. So if we click on that signal, we'll see what the technical breakdown is from Trading Central. Not surprisingly, it's a sell signal. It looks like in the short term, it's gone above the pivot point. So the original signal went bad. Here's your pivot line. It went above that and reached the take profit zone for the alternate scenario. You see here there was a buy scenario, and we see that has gone up into that take profit zone, which by the way then represents resistance up here, because when these take profit zones are drawn, the reason they're drawn where they are is if you look at a larger set of candles or larger time frames, you'll see that further back in time there was resistance at this level where the price was hitting and dropping back down. And so given that this did not follow the original signal, but now we have announcements from earlier today that might work with the original sell signal, we could pull up the chart ourselves and see what we think about the technicals. And so as I'm looking at the Euro GBP here, I'll pull up larger candle sizes, time frame wise, and now we start to see a little bit bigger picture, which fills us in. It looked like this was a huge climb today against that signal, but then we can start to look and try to find resistance levels that are near. And I can see here a bit of resistance from the past, and we can look all the way over here to where this price offered some resistance, where it held and went back down. And then we can look more recently here where it got in this area, had trouble maintaining that price and went back down. And so this is near the area where the signal that we just looked at said to take profit on the buy side of that signal. And so we can see it's hesitating but still trying to climb as it reaches this take profit zone area from that signal. And so if we then go back down maybe to 1 hour candles, just scroll back a little, we can see here is that zone kind of uncertainty where we see in the past this came crashing down, found support right on the line that we drew, and kind of weaved above and below that price line multiple times. So this is an area of support / resistance. If it's on the top side, it's acting as support. When it got to the bottom side, acting as resistance. And so here we find ourselves just below that price level. So if I was looking to go with the idea that the economy there in Great Britain had announcements that were stronger than expected, and in the European Union maybe they were a bit more flat, and if I thought there was reason then for the pound to strengthen with that data, then maybe I trust this resistance level here. What it appears happened today with the fundamental news is because the CPI data was higher than expected. Sure, that means the economy is doing well, driving up the price, but then that also is signs of inflation, which tends to cause the currency to lose value. You need more of it to buy the same thing as prices go up, with the CPI pricing index showing the prices going up. So the initial reaction was fear of weakening of the pound, but maybe the slower reaction could be, well, you know, that data was higher than expected because there is demand in the economy there in Great Britain. And so we have to zero in to see, is this a trend that you're comfortable trading on in the opposite direction just yet? And what I see is it has not turned into a downtrend yet on the 5-minute candles. So as I zoom in on this, sure, there's resistance up here, but this is still an uptrend. And the way I would draw this out is to say low points keep getting higher and high points keep getting higher. That trend hasn't ended yet. Perhaps this resistance level will end this uptrend, or maybe not. So the technicals show uptrend, even if you're reading the fundamentals to think that this could pull back down. So one way, when you feel like you want to trade in one direction, but the current trend is showing the opposite, is to wait for a move then to confirm what you think should happen. And so if I go to, say, the 15-minute candles, and I think there's resistance here, but I think there's still an uptrend. Now, I could put a pending order up here, closer to the resistance, and if it gets up there, sell, but then it's still an uptrend if it hits the price up there. So one way to get around that is to look for, and let me just get these lines out of the way, is to look for a reversal into a downtrend, to drop back below a price that you think might be significant. And so if I go to those smaller candles again, I can start to look and say, okay, if this drops to a point where I can see as this went up, like a staircase it was climbing, and we could kind of draw out that staircase. There was resistance here. It had reacted to this resistance line here earlier, and then once it went above, it was one step up and became support. And then it found another step here where it broke above and found support. And then it broke above and found support. It's like a staircase going up as it had some momentum. And clearly that CPI data did the opposite of my initial speculation. But that's why we look at the technical analysis along with it. We need to confirm in our minds what we think is actually happening. And what it looks like is the pound weakened with the high CPI data because of fears of inflationary effect on the currency. At some point, it may reverse, perhaps because it's actually a silver lining with that data showing that, hey, the economy's got a lot of demand if the prices are being pushed up. And that could be bullish for the pound at some point. So there's a resistance here. It seems to be trying to respond to the resistance. The climb has flattened out, but maybe you want a confirmatory drop below one of these steps that formed. And here's another one. Resistance, resistance, resistance became support, and now here we are. So this is the first step on the way back down. If it was going to start downtrending, then it'll find the next support level and then take a step down. Find the next support level and take a step back down. First, it was stepping up, up, and one more time. At some point, it will cap itself at a resistance level, perhaps this one or the next one. But to avoid getting in early before it's done uptrending, a strategy can be to have a pending order to wait for a downtrend. Okay, so one option here is a pending order below one of these steps. If it drops below this support level here, to have a pending order to sell, then with a take profit further down, with your stop loss then back above the resistance level up here. And that's one option. Another option is to get in now and even before the downtrend occurs, but to trust the resistance level here and the small resistance that seems to have formed here. Okay? And by the way, you can do both, okay, to divide the risk on your trading strategy. So one thing I could do, okay, is first go with a sell, assuming you wanted to sell in this scenario, okay? Perhaps you see this as an opportunistic high point. The sell signal was there originally. Starting out, it failed, but maybe now it comes through. And so we're just below a major resistance level up here. So if you were going to do a market sell, maybe for half of the exposure that you're comfortable with, so then I would say stop loss from the current price would be above this resistance level up here. So 0.8668 or higher for a stop loss. And maybe I say 0.8670, okay, would be above this resistance here. And take profit. If it's going to downtrend, perhaps it breaks a couple of these staircase steps that went up and we hit maybe 86.40 down here. So take profit 86.42, let's say. All right, so now we're looking at potential profit 42.58, possible loss 13.92. Okay, that's with stop loss up here above the resistance, okay, above two resistance levels, and take profit down below two staircase steps here that we drew out, breaking two support levels, coming back down to this price here without having to break down below the more major support level from the past here. So staying within the day's range for the take profit. Okay, so now I just need, if I like that setup with my stop loss up here and my take profit down here, now all I need to do is adjust the trade size, okay? Opportunistic setup here with a much larger possible profit than possible loss. Now I just need a trade size that makes sense for me. If I do one lot, I'm risking about 100. Okay, if I do then 6 lots, I should be risking about 600. Okay, so that's about 1% of my balance, just under 600 risk, right around 1% or a little less risk on the account to go after about 1,700 profit, which is more than 3 times, over 3% potential profit on the move. Okay, and so you can calculate your possible loss down to the dollar, down to the euro, down to the pound, whatever you're trading with on your account, it's calculated for you. And when you're ready to make the move, then you can go ahead and do that. Okay, so that's a market move with the Euro GBP. And it's in alignment with a technical signal from earlier that kind of went bad, but now it's reached the resistance level on the buy side of that signal, which was the take profit zone. We outlined that resistance when we drew it on the chart for ourselves. When we looked at the larger candles, we could see our own resistance up here. And so we've got a sell position at a resistance that formed on the 5-minute candles backed up by resistance that we saw on the larger candles with the stop loss above that resistance up here. So it would have to have a lot of momentum to hit our stop loss, and it could do that. Okay, but it's minimal risk, and it only needs to retrace part of the climb that it did today to hit our take profit, which is down in this area here, without having to even get near the lows of the day on this movement. And the way we've interpreted maybe the economic announcements today, maybe there's some reason for some optimism in the economy in the UK with some stronger than expected data, which maybe could re-strengthen the pound here against the euro, but we'll see. It's always tricky when you're dealing with CPI data, that's inflationary data, and the initial response was that's not good for the pound when inflation was higher than expected. And that's understandable that the currency could weaken in that regard, but then that might also decrease the likelihood of any further rate cuts with that type of data, which then could actually serve to strengthen the currency back up against that initial weakening reaction. And I think that's what it's trying to do right now with this little resistance that's formed. So we'll see if this wall of resistance here that we've outlined from the larger candles comes through and allows us to pull down into profit. Okay, and you can always check on your running trades simply by going to the open trade area, which is over here. Okay, and you can adjust things on that chart simply by clicking and dragging. I could change my take profit. I can change my stop loss price as well. Just by clicking and dragging it, it'll reset the numbers for you. Okay, very simple to do to manage that side of things with the risk management, even after the trade is opened. Okay, now the other part of this move, and there are actually two things we could do with pending orders. Okay, so one side of the pending order could be, wow, if we're misreading this completely and it breaks through all of this resistance and comes up here, you could have a breakout pending order to buy that if indeed it hits the stop loss on the sell, that, wow, there must have been huge momentum, and you could have a pending order here to buy. Okay, I don't lean towards that move right now just because of the way I'm kind of reading the fundamentals, but if that's the way you read it, or if you were just completely ignoring the fundamentals and you were waiting for a technical breakthrough, on the high side above the major resistance line that we drew here from the larger candles, if it gets up here, then something went against the strength of the pound and you could have a pending order up here to buy. Okay, that's one option. Another option with pending order, which is what I lean towards a little bit more, is if this confirms a downtrend further and breaks this first support level that we drew, you could have a pending order here to have another trade of, say, 0.5% or 1%, whatever you're comfortable with exposure, for a second entry on this. And that would be maybe what we call stacking, where you enter another trade on the same position when it's going the correct direction, when it's confirming momentum in the direction that you initially thought. Maybe you went in light, maybe that first trade was a 0.5% risk. And if it confirms the downward movement and moves into profit enough to break the first support level, then maybe you enter with another 0.5% or another 1% risk, whatever you're comfortable with your trade set in terms of total exposure. And so I kind of lean towards that because that's more in the direction, first of all, that I think the fundamental news might pull this. Probably some realization now in Great Britain that, hey, further rate cuts are less likely with that high CPI data because you don't cut interest rates necessarily when inflation comes in higher than expected. So that higher than expected inflation, initial response, pound weakened, maybe longer term response is, hey, rates can't be cut so easily with CPI data up like that. You tend to keep the rates up to bring inflation back down. And so that might serve to strengthen the pound. So technical strategy could be if it breaks this support level, you put a pending order right here. How would I do that? Very easy. Sell. Then I'd say execute when price hits. Should say if, by the way. Execute if the price hits. There's no guarantee it will reach this price, But if it gets down to 86, let's say 53, that means it broke this support level. Okay, so 86.53, 86.52. That means our first trade is in the money nice. And it means it established a stronger downtrend. So then maybe you're more comfortable entering with a second trade. And if it does break this support, again, you could take profit at the same spot at this support level here before the major support level at the bottom, or you could take the take profit a little further down than the first trade because you feel that there's more momentum established, and so maybe it will approach this larger support level from the past and go more towards the low of the day today on this, okay, without even having to reach the low. Still, the low would be below this more major support level down here. So let's shoot for then take profit just before this major support level here, which would be 86, let's say 38. Okay, and then stop loss, if it breaks this support level and you think this is a strong downtrend, then it would have to break back above there, and let's say back above where it is now to hit the stop loss, and that would certainly be a reversal if that happened. So it would make sense maybe to get out of a sell position at that point. So the first trade stop loss is up here. The second one could be a step sooner, 86.63, something in that range would be above that line. So stop loss on the pending order, 86, let's say 64. Okay, so risk a little closer to the potential profit on this one because we're entering at a lower price to sell, but the reason for doing that is waiting for more of a confirmatory downtrend before sell. Okay, so you sacrifice some of the entry point for a larger level of certainty. So the ratio is more 1-to-1, but maybe your certainty level is higher. Okay, now again, maybe I'm not comfortable with that much risk, 2,400. So now that I have my exit point and entry point figured, I need to adjust my trade size again to see what trade size is right for my level of risk tolerance. So looks like about maybe 3.5 lots might get me there. So that's less than 1% risk. Maybe I go 3.7. And that puts me just almost exactly at about 1% risk compared to the balance in this account that I'm using. Okay, so little better than that on the profit side if it wins. So trying to make about 700, risking about 600, only entering if indeed it becomes a strong enough downtrend to break this support level, then it would trigger my trade. And at that point, I could consider manually closing my first trade, even if it's not to the take profit yet, to secure some of that profit while the second one carries out. Almost risk-free at that point, because the amount you made on the first one would be the level of risk approximately that you have on the second one. But it's okay to let them both carry out to the programmed potential take profit as well. Everyone kind of handles that side of things a little different, but if you ever wanted to close a trade early, you just go to the open positions, get the chart out of the way. You can go to the X and close any portion that you want. So the initial lot size was 6 lots. I could change this to say 3 lots and close half of it if I want. That would pocket half of the P&L, the profit or loss, and the rest of the trade would carry on. Okay, and so you have that option to close any portion of the trade that's running and leave the rest open, or you can close the whole thing once it reaches a profit level that you're happy with. Okay, so that's just a little trade set on the Euro GBP based off of the signal from Trading Central, the resistance levels from Trading Central, which was the take profit on the buy side of that signal, and then the fundamental news as it came in, understanding why there was an initial bounce against the pound with the euro, and understanding maybe hypothesizing why fundamentally there could be a pullback then and then trusting the resistance level maybe on the chart that we outlined as well from the technical side. Okay, so kind of using the technical analysis as a way to zero in on what you think the trend is doing currently, where you think your entry points and exit points should be, the technical side of things. It's great for that. Getting a feel what's the current momentum on the chart, and also where should I get in and out. And then the fundamental side is, do I think that that's at least neutral, or potentially are the fundamentals in my favor trading in that direction? Okay, trying to kind of put the two things together, but leaning on the technicals in the end to see what is the current momentum, the current trend, and what do those support and resistance levels look like right now. And if there are any questions, feel free to ask. I'm happy to answer any questions that might come up. And we can also take a look at something like gold. Okay, there's been a bit of fear today. Why? Fear about tariffs kind of coming up again, especially out of China, and some fear about the effect it could have on the U.S. economy as well. There's some data that came out of the U.S. that maybe doesn't lean towards Jerome Powell wanting to cut interest rates. Most of the data was showing a slowdown in terms of inflation in the U.S., but there was some recent data that maybe sways the opinion a little bit the other way. And so I think there's some fear about what will the next rate decision be in the U.S. Will they lower interest rates or not? And also, sorry, I've got some technical issues here popping up on my screen. Okay, and then also the questions surrounding will there be any escalation in trade war negotiations or not? That's kind of on people's mind along with it as well. There was a big pullback in the tech sector today. The NASDAQ really had some movement that shows that there's a bit of fear there with the volatility index spike. Okay, so keep an eye on the U.S. dollar to strengthen in such an environment. It's not uncommon for the U.S. dollar to strengthen when there's fear on the markets. Again, I'm sorry for the technicals. My windows on my browser are popping around. Apologies. Not sure what's happening with the software. I don't think it's a problem with our platform. This is the webinar software acting up. Not sure what the jumping around is about. I'm going to ask you, type OK if you're still with me. If in the chat box, if you could, just type OK if you're still hearing me clearly and seeing the screen all right. Apologies, guys. It looks like these technical issues aren't going to stop. They just continue to bounce my browser windows all over the place. We'll try and get through a little bit further here and carry on, but we'll see what happens. Okay, so taking a look then at gold is what I wanted to do before the technical issues popped up. And we could look at the signal. The signal on gold is a buy, and it's kind of what I was alluding to. When there's a lot of fear on the markets like we've had today, you tend, in a general sense, to see safe havens strengthen. And gold being one of the major safe havens, it's not a surprise that I see the signal is for a buy position on gold. And it looks like it's above the pivot line at a pretty decent entry point if you expect this to bounce off this support level, which is the pivot line. As long as it stays above the pivot, it's still a buy signal. If it drops below, then that signal would be deemed no longer a buy signal. But it still is a valid buy signal here on the chart. And you see the potential take profit zone up here is where the first resistance might be found, according to Trading Central, up around 33.58 and higher. Now, apologies, the technical issues continue, so I think we're going to have to end things here. But the technicals are lined up there. If you want to look at the chart, looks like gold is lining up from a technical perspective for a buy. And at the same time, the fundamentals are right behind that with the high volatility on the VIX index, which is referred to as the fear index many times. So that the fundamentals line up with this technical signal, and it looks like it's in a spot that you could act on that. Again, if you're acting on it, you enter in, you take profit, stop loss settings, and you can calculate your exposure and risk very easily on this. Without even breaking the high today, you could get a nice little run up to the first resistance level today. But looking at larger candles, it looks like it could easily run up to a higher resistance level, perhaps one of these spots here, or up this way near 3,400. Okay, so it's something you could take a look at, maybe line up a trade on that. I'm going to cut out right now and try and investigate, at least for tomorrow's session, to see why these windows keep jumping all around. But thank you very much for joining. Good luck with your trading the rest of the evening. There's some FOMC minutes being released out of the US and some meetings, monetary meetings in the US as well. So you could expect some more volatility with the USD pairings and the major US indices as well. All right, everybody, sorry for the technical difficulties, and we'll go back at it tomorrow. I've got my earlier session, 11 a.m. UK time, for the fundamental side. All right, everybody, thanks for joining. Bye for now.